The following is a presentation of TFNN. Live at TFNN, the Bull Bear Binary Option Hour. Brought to you by Nadex. Call now. Toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien and Darrell Martin.
All right, folks, we'll come on here to the Bull Bear Binary Option Hour. And we're going to have Steve Rhodes right here with us. Tommy O'Brien's out for a little bit, but he'll be joining us here in just a moment. And happy Friday morning. All right, let's check out where the markets are at this morning. We got the S&P markets just opening up 5 points right now. We got the Russells up 6. Nadex currently up 18 points of the day with the Dow up 13. Copper is moving on down. Started out with a bang right now, down 1% on the day already. We got gold down 8 points, not hesitating at all to get on down there after that meteor rise yesterday. We got silver right now is down 1% as well. Natural gas is currently pretty flat on the day. Oil is currently down 24 cents. Corn is down just a couple dollars. Soybeans down a couple dollars. Looking over at our FX pairs from the overnight move, there we got the pound dollar down 38 pips. The euro dollar is down 10. Euro pound is currently up 18 pips on the day with the dollar CAD currently up 32 or down 32. Got that one backwards. Got the dollar franc. Got to get my coffee in me there. Got the dollar franc right now up 12 pips. Got the dollar yen up 20. Pound is currently down 14 with the euro yen up 13 and the Aussie yen up 36 pips on the day. All right, so let's look and see what we got going on. Maybe we can find some trades this morning. Look around, start doing some hunting here, and see what all's happening at the Bull Bear Binary area. Maybe we can find ourselves a binary trade, or maybe a spread trade. Either way, Nadex trade would work fantastic. Okay, looks like we might have a nice little reversal happening here. Checking this out over on the pound yen. I'm still looking across, just trying to see what else we got going on. But pound yen looks like it might be wanting to move on up. We got the Russell's been moving on up there. It's up right now, 7 points on the day. It looks like it's still going. Don't see we're a little late on the entry on that one. So I'm going to hold off on that one. Potential breakout, but it's a Friday, and you can get into the oscillation zone going on right now. We're sitting at a half deviation level. Let me go ahead and bring up a Russell chart for you, and we'll get it going. Okay, let's see here. And I'll go over it with you. I just got a new announcement that came in through my platform. All right, so got a chart, and we have oil over here. Let me bring that up. We're gonna search through a few of these, see what we can find this bright and early morning, and I think we can probably find ourselves a nice little trade. Just Friday morning can be fantastic, or they can be just quiet as can be. So between all the stuff we got out there, we're gonna find something. Okay, just give me 1 second to pull that on over. And let's see here. Okay, chart ought to be rendering. One moment. Okay, here we go. Opening that up. And look at that. Man, oil came down. Bounced off the 1 deviation level, bounced off of it again, and it looks like we don't have a spike striker set up at the moment. But man, what a move right there. Perfect bounce right off the 1 deviation. Great spike striker this morning right here. This one would not have worked out, but it never triggered. This one right here, though, perfect bounce right into the close. All right, well, that's oil. So coming off its 1 deviation move, heading on back up at the moment. And most we could hope for maybe on that is going back to settlement. So we might try that here in a second. Let me see what else we got on this. I'm going to go over to Russell real quick. If we go to settlement, we'd be looking at about 103.20 on that. And while that's coming up, we'll go in, look at it over here. All right, so on the Russell, no spike, no volume spike, just real, not bad volume. A decent little trending volume day. We're pretty much on expectations. So we should basically at most really expect to hit expectations each hour on movement. Our expected range high to low on this hour is 6.4 points, and we're currently at about 4. So we got about 2 points of movement, either above the high that we're at or below the low that we're at right now. And since we didn't really fill in the gap out of the gap, I guess there's a little itty bitty gap right there. We filled that out of the gate. It popped right up. It's moving on up. It doesn't look like it wants to stay down there. But we got a couple more points left in this hour, and we have enough volume, I guess, to carry us through. If that does carry us through, it's going to have to break through the 0.7 deviation level. As you can see, we're sitting right there at it at the moment. And it took about... it took us 20 minutes to get through the 0.5. We got through it. Finally went on there. What would the move up be? It could be up to 1143.8, but for the current hour, it may not make it that far, maybe up to 1142. So if I come on over here and I pull up some of the spreads we got here on the small caps, let me see what I can find for us on the buy side. And wow, so they're all stretched out right there. Okay, so let's go ahead and let's bring this down to like at least a 0.5. And let's say we don't want to risk more than $100 on a individual contract. We can do as many as we want. Okay, that narrows us down instantly to just 2 mirror strikes. We can go in. We have the small cap right here for 12 or 415. 12 o'clock's, well, it looks nice, but the problem is it's going to run out of room pretty quick. It's only got 2 points left to go, and it's going to go slow into that. And that's all the way till 12 o'clock, so that's 2 hours. So we're really going to not see a lot of fast movement on that. We're going to have a slower delta. I don't know if you know how options work, but basically the way options work, their delta approaches 50 as they approach the strike price. Okay? Well, spreads have 2 strike prices. They have a strike at a floor and a ceiling, so like an 1132 and an 1139. So if I go in and I look at just this one right here, and I zoom in on this chart for you, as the underlying market, that's the different shaded line right there where you see that shading difference. That different shaded line, as it approaches this strike, the ceiling, okay, up here to 1139, or this strike, the floor, down here to 1132, the delta will get closer and closer to 50. Now, if we're buying, that delta is going to get 50, and then it's actually going to go even lower as it goes outside of it. So it's a little bit interesting, because what happens is, it sort of acts like, as far as a pricing model, like a put from the ceiling down to the center, and sort of like a call from the ceiling up to the center. And I just mean in the pricing model, okay? So the reason I say that is you're looking at 50 to 100 right there in the middle, okay? So if I'm at 50 at the ceiling and I'm at 50 at the floor, my delta, which means the rate of change of the options price based on the underlying's move, the closer I get to the center of these 2 strikes, the closer I'm going to approach 100 on my delta, which means the spread is going to move basically at the same speed, okay, as the underlying market. So if I look over at the one that expires today at 415, it'll move at about the same rate, about the same speed as the underlying market. When you see it move, and I mean, you want to do this more like on a point basis and a tick basis, okay? When you see the underlying move, like say a point, you want to see this move about a point. So there may be some premium in there, but it should go up by a point. Either way, it may still have the same premium or less premium, but about a point. And as the closer it gets to the center, the more it'll be right on like a point-for-point basis, okay? So why is that important? Well, if I'm buying, and I was at 50 down here, okay? I mean, it's moved about, for every dollar or so, every point it moves, this spread is moving about half a point. And then about 0.6, and then about 0.7, 0.8, 0.9, 1, okay? And then it goes 0.9, 0.8, 0.7, 0.6, 0.5. All right, and then 0.4321 and 0.4321 on the outside of it. So what I like to do is I like to find them on the beginning edge of the gamma curve, so like in this bottom third, if you will. And what that does for me is it allows it to be maybe 0.7, and then go 0.8, 0.91, okay, and then 0.9, 0.8, 0.7. So I'm trying to catch really the middle third of the movement of a spread. If it's a 70-point spread, that means I'm probably trying to catch somewhere, around 2 to 3 points, maybe more, maybe 4 points on that spread. If you got a 200-point spread, hey, I'd love to catch. Go in and catch, say 70 ticks. 7 points, because that's 20 ticks is what that is. So about 7 points of that spread. And because I want to catch it at the beginning of that gamma curve where it starts speeding up from like 0.7, 0.8, 0.9, 1, 0.9, 0.8, 0.7, all the way up. And the better I can do that, then that way I make the most out of my leverage with that contract. So let's go over, let's look real quick. See how we're doing? Yeah, so we haven't got it yet. We didn't get that breakout. See, it bounced right off the 0.7. And so we'll see how it goes. But we could end up making those extra 2 points on the downside. And that'd bring us right back down. Well, it wouldn't bring us to settlement yet because we made a little bit of a high there. But let's see, the low on the hour here. What do we got? 1134.9. We got about 2 points to go, so it could go down to about 1132.9. And as you can see right here, our expectation on the hour is 6.4 on a movement right now of 3.5. So we actually got we have 2.9. We have about 3. So almost 3 points down would bring it down to about 1131.9. So we could move down to 1131.9, or we could move up. It's just, it may wait for the next hour to get the umph to be able to push on up and break through that top level. All right, so we backed off on that one. I'm glad we did. Let's check out, did oil back off at the same time? See what kind of correlations we might have going on. And look on at it. But yeah, it's pulling back right now pretty strong. And I can even see in the chart, you'll see this line move down. This is a live price. We can't show you the live price, but we can show you where it's at in proximity to that spread. And as it's moving up and down there. All right, so oil did do exactly what I said. It went there, it popped. Man, we should have taken that when we saw it, huh? It popped and hit settlement. And that's a trader's life, isn't it? Woulda, shoulda. But it was at that 0.5. It went up, it popped up and hit settlement and bounced right off of it. Didn't get a volume spike, but have one setting up potentially. Let me see. I don't know. Let's see. We got what? 1,300. Is that right? Expected volume 13. Oh, no, we don't have a volume spike setting up. But right down to one deviation on the dot. Right at the settlement, on the dot, turning it right back around. All right, stay there. We'll be back right after this.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about The Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive The Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on The Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Folks, welcome on back here to the Bull Bear Binary. We got oil pushing up against settlement and dropping right back off.
Welcome back, folks. Darrell, can you hear me?
I can hear you just fine.
Oh, this is not good.
Well, now we got two people talking and nobody's listening. So, let's see here. So we got audio checks. I cannot hear. Or he can hear
testing.
Me. I gotcha. Okay. Anyways, yeah, so I don't even know where to go from here because we're going to get interruptions. One moment, folks. It's one of the fun things about live radio is you got to have a little bit of audio connectivity issues there now and then. And that's just how it goes. All right, well, I'll keep looking at the market as we're moving on through here. And we got settlement coming up right on this, so we bounced up, hit off settlement, hit off settlement, hit off settlement again. It is obviously wanting to push down. Let's go ahead and let's find ourselves a trade on this because oil is just wanting to bounce right back off that, and I want to see if we can take advantage of it. Okay, so we're going to go in, and we're going to do a couple possibilities. And, all right. We got enough in there for that one that I've set aside. So I'm going to go in and pull this up. Bring this up to the left. We're going to go in here. We're going to find ourselves a binary. Let's see what we can get. And let's go over here. Let's find a sell side. Let's choose oil. Here we go. And let's get rid of those other filters we got. We got some filters blocking things up, getting in our way. So we're going to set those out because I think I had it set for daily yesterday. We were looking at some different trades. And we'll go ahead back in here. We're going to throw that sell side back on and see what we can maybe get a hold of. All right, so we got a 75 right there. What kind of contract is that we're looking at? Let me expand this out, make it a little bit wider so we're not going back and forth. And that's going to put us down at, 102.81. Very realistic at the speed we're going. So I'm going to check that one out. We're going to go in here. Here's what we're going to do. We're doing out of the money trade. See if we can get down to 102.81 right here. Okay. And so grab that one. And as soon as I get that, I'm going to get filled on that. As soon as I get filled, I'm going to pop on back in here. And now I'm going to go over here and I'm going to set a take profit for the trade. Very short trade, just a quick out of the money trade. Only about $20 risk on it. I want to set a take profit to buy it back at 57. Okay? So quick scalp trade, in, done, out. And we don't have a lot of time on the trade. That's why I want to get in and get out of the trade pretty quick. And so sell one. We've already sold it. Now we're going to buy it back at 57 as it moves on down. Okay? And I can set that as an advanced take profit order for me. And so right there, so it's already working. And just let it do its thing. But what's it have to get to for that to work on there? For that to work, we are going to need a movement down to 102.81. Okay, so we need about 15 ticks down. We are already past the 0.5. We're at the 0.5 deviation level. Volume has backed off a little bit, so that will be our roadblock. That'll be our impediment on this trade. But it is past it a little bit already. So if it can keep moving on past it, see right there? We really, we're stuck in between the two levels. We just need that further move on down to a little bit, and I sort of like this, a little bit above the one deviation move. And to help you see that a little bit more clearly, I can go in here, and I can probably knock off the 15 minutes. I still like to see my 5 and 10s. And expand that out. Hold on here. Then drag it on down. And it's like we're already into that zone. We got to break through that fight. That's like I said, I had that little impediment. We got to break through that zone, but we're into it already. We've already went below it. And come a little bit further, and then we're golden. We got it low right now, 102.92. We were going to break that 102.90 level, get outside of that little range. See that little highlighted area I have just right around, just a few ticks above, a few ticks below. And so we're sort of at that battle point. But I want to get in now so I get a decent price on it. If I don't, then, we're going to basically, all the profit's going to be gone before we get there. And but just the way the market's reacting, how it was really rejecting that settlement price level at 103.19, then it's really important that we go ahead and get the trade on and set up and ready to go. So just a little bit further on down, but we'll be back with the diagnostic or the bull bear binary hour right here, right after this segment.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, folks, we'll come on back here to the Bull Bear Binary Hour. Man, it's rejecting our price. So, well, the nice thing is we didn't out of the money binary at least. Anyways, so maybe we should have in the money binary if at 103.15 and got in a little bit earlier. But those deviation levels are working too perfectly. It went right on down to 103.90, and it's pop right back up on it. We still got a little bit of time. We'll see if it moves on back down. Oil can move lightning fast. It only needs 5 or 10 minutes to make that thing happen. So, anyways, but the beautiful thing is that with an out-of-the-money binary, I don't have to have a stop loss. That's probably what I love about it more than the larger profits, is I don't have to sit here and stress. If I have an in-the-money binary, it's taken against me, and I'm going to get out. That's where I'm going to stress a little bit. So we hopped in the trade like right over here, like right at this level. And maybe I can get a little bit bigger arrow here. It's like right here. Okay, we hop in the trade. Comes on down and just pop right up against us. On an in-the-money binary, you're like, oh, tick, 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 tick. Because to me, that's my personally. I guess every trader has their differences. But with me, the stress comes in on when you have to make a different decision. When it's ticking against you and you may lose. You may have to get out of the trade. And if you have to get out of the trade, then you got to decide if, are you gonna get back in the trade? Are you gonna go the other direction? Are you gonna sit on the sidelines and watch it go in your favor? What are you gonna do? And that's the stress in trading personally for me as a trader. It's not so much like the losing the trade, because I keep my risk in check and whatever. If you have too much risk, then yeah, you're definitely going to be stressing out, really probably no matter what. But it's not about winning the trade. It's more just about, okay, now I got to make a decision and I got to put more money on the line. And I don't want to have to do that. So I don't want to have to put more money on the line. I'd rather just be able to use the same money I got. And by using an out-of-the-money binary, not an out-of-the-money binary that's way out and, who knows where land, but one that's, within a very realistic expectation of movement. That's why I'm so big on these expected ranges. I'm so big on these deviation levels. And finding one that's, like I said, within a realistic expectation there. I need this to get down to hit my take profit. And let's see, which contract we got. Let me pull that back up over here on the side. I got my take profit working. I don't have my order in front of me. Don't need to. 102.81. So literally by this time, which is not an unrealistic expectation, I need oil to basically continue in its downtrend. And I don't care how fast or slow it goes, just go fast enough to get there by 11 o'clock. Okay? So if it can move on down to 102.81, I will hit my pending take profit order of $57. And I don't have to stress about it. And it's like, it's bouncing off my level. There it goes. Look at that punch. So let's see if it can punch through a little bit further. If it does, we're good. But there's no stress. There's a take profit. My trade is my stop because my risk is capped. So I have, depending on what price you got in here, I got $27 of risk on one contract. You could do 1, you could do 10 and have 270, you could do 100 and have 2,700. Obviously, as long as your risk is in check, your heartbeat shouldn't be going up when it goes against you. You shouldn't be doing 100 contracts on an account with, what would that be, $2,700 or 270, 10, 100, 2,700. So if you got $3,000 in the account, you probably shouldn't be putting 2,700 up, right? But there we go. She's pushing through. Okay, so get a little bit lower. And we'll hit it here. Let's watch it happen. Come on. There we go. Profit taken. Nice. Okay. That's what I want to see. And worked on out, came down, hit our exact target level. And I don't know what it's going to do from here, and I don't care. That's my trade. So I'll look for another setup. If I get another good setup on oil, I'll take it. Okay, so I'm not done with oil, and I'm open to looking at anything else. I just want to, do the one trade I want. I don't want to stare at this and go, oh man, it went all the way down to like 102, like 10. I could have made $70 on that trade. Well, coulda, shoulda, woulda. That wasn't your plan, and it wasn't your plan for good reason, because that was a perfect target level. It was above the deviation level. It was basically right at the high to low range on a retracement, coming on down. Basically, all I needed was a pop below 0.5, get that, take it, be done. And otherwise, I could see all my profits float away. Okay? And, if we look at the price of that same contract that we just got in, that we just took profit on, let's go down here, let's check it out. And we'll see 102.81 is now at 61.50 by 67, so the ask is 67. We took profit at 57. So now $10, which was about, half our profit there almost, is gone. But it may keep going. Let's see if it does keep going. Then where could it potentially keep going to? Okay? So on this, if it kept going down, now, again, this is not my trade, so I'm not adding in. I'm just trying to do a little chart analysis for those out there that maybe are trading oil right now. We're going to have a resistance level right at 102.78, just like we had at 102.90. Okay, if we can break through that thing with any kind of oomph, then the next level is going to be very obvious. It's 102.60. Okay. Now, whether or not that'll happen in the next 15 minutes, I wouldn't quite bet on it, but who knows? Like I said, oil can move. It moved from 1 to settlement in 10 minutes. Right, it's a 5-minute chart. In 10 minutes, we moved an entire deviation. So, could it move from here to here in the next 10 minutes? Yeah, it could. Am I expecting it? No. So, I don't see anything to tell me that's going to happen at the moment. But if it moves down, that would be my next look to definitely be looking to take profit on that. We have had some days here in oil recently where we've been able to push and punch through some of those deviations. But you can see actually it went down to 102.78. What's it doing right now? It bounced right off of it. So it's going to have to break through that 102.78 and then come on down to 102.60 will be its next target. And that, I mean, obviously is a solid magnet level. So that's the one thing that would draw it there, is that we've been there for about 20 minutes out of the day. And we've been there on decent volume in that time as well, comparatively for the day. That's where all the big volume happened. So, there was some move down, a little bit of take profit happening right here through this volume spike, pops on back up, and then comes on down. Final big take profit order takes place. That's why you see it moving on back up. And then they take all their profit. That starts popping it back up. They're done taking profit. The buyers run out of steam. Comes on back down. One last umph. That's why you see this little jump in volume happen. One last umph and take profits. And people start seeing this as a support level. They start playing it. Buy. Goes on up. Where is it going to go? Basically to where all the orders fell at last time before it turned around. Right back on up to settlement. Runs on back up to settlement. And does it pretty fast. So a lot of buy orders coming in. And boom, they dump them. Sell orders start taking over. So they're selling. And finally it comes on down. And then you get some of your stop triggers starting to get hit. Okay, so stop losses are getting hit over here. Let's look at this. Let me zoom in on this and show you. I mean, you can really start seeing the story of what's happening with people's orders on oil or on any chart just by looking at it. We got a low of 102.82. Right here we have a low of 102.81. Guess what? If you came in here and you bought at this level, or let's say you bought on the breakout of this bar right there, so right as this bar's high was broken, you got in, and it moved up for you, and then all of a sudden a heartbeat, ba-boom, 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 goes back up. You're like, oh, okay. And I was like, ba-boom, ba-boom. Then all of a sudden a heartbeat, ba-boom, 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 going down, right? Where is your stop? Where is your stop? Your stop is right here, okay? It's right below the low of that. And guess what it did? It was so nice. It came down and it filled it for you. Because the market does what? It exists to fill orders, okay? So you had to stop at 102.80, and it came on down, and maybe a little bit higher than that, but 102.82. And that's where your stop is. It comes on down, and it touches not only 102.82, but just for you, it comes on down to 102.81 and fills it. And it does that because, again, it exists to fill orders. And so if you're basically operating on the premise of becoming the consumer, not the supplier. You want to be the supplier. The supplier sees this massive run-up in orders, sees the volume die out. They start selling, and guess what they target? They go, where would all the stop losses be? Because I need people who bought and who are looking to sell down here. Why? Because I'm going to sell up here, and I want to buy back from some sellers that are lower. And so I sell into it. This is basically what we did just now. We just did it with a binary instead of a future. But we sell with the premise of going, we're going to take profit down here. Now, we had several other things at our advantage. We knew where the deviation levels were. Okay? We knew the expected high to low range. So that definitely gave us an edge. But also, if we would have taken a moment back, and honestly, I did not do this. I wish I would have. It would have given me even more confidence in the trade. Either way, it still worked. But it would have said, where would the stops would be? And you want to think about that. Okay, when you're getting in a trade, and I don't care if you're going long or short, you want to think about, if I was in a position of the opposite direction, where would I probably have gotten into the trade? And then based on that, where would be a high likelihood that I would place a stop loss order to bail on the trade? My, uncle point, okay, I've had enough, I'm done. My uncle point on that trade. Where would that be? Because wherever I would put it is where tons of other people will put it too, because we're all alike, okay? And if I can learn that simple skill of self-analysis without trading that way, okay, of the ability to go, if I was doing this, I'd buy in, I'd be sweating, and I'd have my stop probably right here, and if it gets down to that point, I'm afraid it's going to fall back down to 102.60, that's another 18 ticks. Probably going to want to bell on the trade. And I'm probably going to have a whole bunch of orders sitting right here at the bottom. And guess what? You look at this. Look at where the volume happened on this 5-minute bar right here. Right in that bar. Right where those stops were hit. Okay? So there was a big battle that had. This is a bunch of take profits. Things backed off because they took profits away. A little dip. And now you got buyers and sellers. You got a little doji, a little indecision happening right there. Then it pulls on back down. So this is where the sellers are starting to load up, and the buyers are trying to take it higher, and they don't have the strength. Okay? And then the sellers come in. They back off a little bit. They come in a little bit more, and now they're like, okay, punch it. Let's go. They punch it on down, and they have all their limit orders, their take profit, just sitting there where all those stop market limits are sitting. Okay, their stop market orders, all their stop losses to go, hey, I'm going to sell out of this thing. Great, because I want to buy back from you. And it's not so much, an evil thing. It's just understanding how markets work. And markets exist to fill orders. And, I mean, if you're pushing around 100 contracts, you're pushing around some cars or whatever, and, you're doing 100,000 or 1,000,000 shares on a stock or whatever, you need to know where you can get out of that thing. You don't just want to hold it and get stuck with it. The only way you can do that is knowing how to analyze. I learned this from fund managers that, handle large positions. And they basically said, we have to know we can get out of a position. And to get out of position, we have to know where the order flows are. And I'm not talking about, going in and looking at things that other people don't have access to and all that. I'm just talking about, market, volume profiles, expectations, things like that. They have expectation models, sort of like what I use. But also they have very simple, just human nature ability to look at a chart and go, where would my stop loss be if I was long in this trade? Where would I probably have got in at? Where would I probably set my stop at? What would I probably be filling? Therefore, as this is happening, my stop is getting more and more firm because I think I'm going to lose, and it goes down, and that's where my stop's going to be. And you're going to go, okay, let's sell hard. They have a lot of orders right there. And, it's not massive. We're only talking about 1,000 contracts or so. But there's 1,000 trades that flew off the handle right there very fast. And then we look over here. There's people getting in. We got a volume, 1,000 contracts, 500. So, there's sellers coming in. There's buyers coming in. Not everybody's done yet. Only 1,000 contracts happened right here. So it's not all done. Not everybody had their stop there. Some had their stop. Guess what? Where would the other stop loss be? If this stop loss just got hit, where would the other stop loss be? It'd be right down here. Right below the low, pretty much of the day, right? 102.63. Let's see if that's the low of the day. Let's back up and see what we got. Because you're going to have some, they're going to be a little bit more aggressive on their stops. So 102.63, 102.63, 102.58, 102.60. So right there between 102.57 and 62, lots of stops, which, by the way, is right at one deviation level. So we're probably going back there. Stay right there. We'll be back after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Folks, will come back here to the Diagnostic Trading Hour. Bull Bear Binary Hour. Got too many hours going on. Tommy O'Brien show this week, Bull Bear Binary Hour and Diagnostic Trading Hour. So just rocking along. Okay, so checking this thing out right now. We got the market moving on down. I'm looking at oil, and we know we have resistance. Obviously, it's a very solid or support level at right around 102.78 over here. And a little bit above that, just basically in that zone, give or take a few ticks, but right at this zone for the 0.7 deviation level. So it wasn't able to push through that with a lot of volume. It basically came down to it. It hit all the take profits right around expected volume. So nothing massive. We also made the expected move on the hour. We're about to wrap this hour up. We have a new hour coming up with new expectations. And so with those expectations, 102.95 on up to 102.24. So it's going to give us about a 30-pip range of expectation of movement on the next hour, so keep that in mind. And with that being said, if we do make a low, we're probably going to go back on down to the 102.60 zone area, which will be the 1 deviation level, maybe a few ticks below that. Definitely going to have stops all around hanging out in this range, okay? So we're going to have some stops right there just chilling out, and the market is probably going to want to fill some of them. On the flip side, we've had people short after the market ran up and pulled back. Let me show you this here. This big move up and pull back, and just on, there's been obviously a lot of tragic news happening here in the last 24 hours. And as that has happened, keep those people in your prayers. But markets ran on up, and a lot of shorts going on. So with a lot of shorts going on, they're going to have stops as well. So what about the upside? What if you got that contrarian, you think it's going to bounce on back up view, go against all those short sellers, they want to take their profits going into the weekend, etc. Then obviously one place would be, the first place is going to be the most recent high, right above settlement. So if you do decide to go long, one point to at least tighten your stops or look to take in some of those profits is going to be right around 103.19, right above that. Which is at settlement. That's where that bar went right to. Sort of, the way I have it zoomed, it looks like it, went further. But 103.19 literally is the high, okay? And that is the settlement for the current trading session here. And there'll be some stops right there at 103.20. If you want to figure out where the stops are above that, just take it a step back. Okay, let's go back here and go, okay, well, what if I got short earlier than that? Where would my stops be? And look at where some of the punches came in. Okay, so this volume right here, this big volume that came through and sort of punched right through. And it's not big, but it's big comparatively to that around it. That's going to be another big area with stops. So 103.32, that high up there. So you're going to have some stops around 103.32, 33. We'll see some more stops. And you can keep going back, and you can do this over and over again. And this is sort of it's sort of like a magnet price. But it's not the same thing. Magnet prices, we're using 10-minute bars, high-volume bars compared to everything else. That price down there at 102.60, that's a magnet, okay? That is definitely a official magnet price. The spike strikers there, those are sort of mini magnets that are going on, okay? But this is also just, order flow magnet prices. So we got high volume magnet prices, we got spike striker magnet prices, we got order flow magnet pricing. And with that order flow magnet pricing, that's just letting us know where would the next stops be. That's all that's about, okay? And if I know where those next stops are, I can know when it pops on back up. As you can see, we're moving on down, and if we can get past that 0.7 again, and you can see it's not an easy level. It has to, have some oomph. But if we can get past that 0.7 again, we're going to go on back down to 102.60. All right, I'll see you back here in just a couple hours on the Diagnostic Trading Hour. Hope you all are having a great morning. And stay tuned for Basil Chapman right after this.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.